Let's talk about volatility. We got a lot of questions lately, guys, about the current market conditions and how long is this going to last is the most common question. I want to show you a chart here first to start things off, guys, of the VIX, because there is a very clear, if I can bring this over, it's not actually cooperating right now, but let's do this. There we go. I'll show you the chart of the VIX and show you a very clear uptrend on a daily chart for the VIX. We got all the way up here to 34. These are the futures, S&P 500 VIX futures. 34 was the high, but a very clear uptrend. We're struggling to get back above 30 on the VIX, but obviously the volatility index going to measure how much volatility is in this market. But the question is, what can we look to maybe give us a hint as to when this might wrap up?
How long will volatility be here for? Ever? Look, man, it's around so long that we're going to take the F off the F forever. But it's just, I'm going to put up a countdown for you guys. I hope you can see this here. Countdown to the FOMC, 14 days. We have not had the rate hike yet. Everybody is ready to react, and look, we've been seeing increased volatility for a while. I get it. You also have what's going on in the Ukraine and Russia, but it's been here for a while, and it's a symptom of the change that we've had in the overall market. We know we're in a raising rate environment. Everyone's adjusting on the fly. You're repricing major names. And on top of that, the other phenomenon you have here is overwhelming options trading. Right? Like, we know this is the case. Just watch any stock after it reports, and you're seeing incredibly wild swings in the aftermarket, in the pre-market. It's completely crazy. That's not going anywhere. I think volatility is here to stay. If you've traded in a raising rate environment, then you understand that is great for short-term traders because the uncertainty of when are they going to hike next? Is it going to be 50? There's more surprises at bay when the Fed is making moves. So I think increased volatility is here for the rest of the year. That's just 2022. I mean, the example is going to be, look at the moves in the Q since we've turned and broken down. Look, we took that 200 period, we broke this 375 support. It's just been a different ball game, right? You're not having these tight consolidations. You are getting wild swings. Even on the way up, look at how controlled the moves were at the upside. You didn't have many $10, $15 days in the Qs, 20. It just wasn't happening on the way up last year. On the way down, we're seeing a heck of a lot of that. So my answer is, I don't think we're going to have any signs of it until maybe when the Fed starts, the whole notion of paring down the balance sheet. That'll be the last shoe to drop. And when we get a target as to where that might trim off to, then I think volatility might calm down. But you're talking, down the line this year. I mean, they're still buying bonds, right? Like they're not doing that runoff just yet. There's a lot of shoes that have to drop before I'm going to be convinced that volatility's gone.
Yeah, hard to disagree with that. I'm just going to go, to be as honest, and straight up as I can. I think oil needs to drop down. And because, we're talking about volatility. We're not talking about when the market makes new highs or new lows. It's just the volatility. And honestly, when oil's acting like this, it throws off the equity market a lot because, there's a lot of names here in manufacturing that rely on oil. We know a lot of the airlines, the travel names, obviously a lot of the production. We just talked about manufacturing, industrials. A lot of that is on oil, and there's a lot of hedging going on in the market between your equity positions, oil positions. We're talking about gold as well. But I'm just going to use oil here because, when is the last time? You can go back. There are times like this, 2008. Obviously, oil went negative in 2020 as well. But, like this move, this goes all the way back to, this is a year. This goes back to 2020, 2021, the beginning of the year. And, today is the largest up candle for oil. So, it's starting to move. Look at the last, even since December 20th, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 red days since December 20th on oil. And I'm not even sure some of these are even red, to be honest with you. You could barely see some of these ticks. So oil's leading the way right now to the upside. And I think it just needs to calm down. Like if oil can calm down, then I believe the volatility will once again be here. But a lot of this obviously has to do with overseas and things like that. But I believe oil will lead the way here once it starts moving again, 0.5% a day, things like that, instead of 8, 9, 10% a day, then the volatility should sort of start to levy off a bit.
Geopolitical concerns remain on the overall market, including on energy markets and oil markets in general. Whether you're looking at geopolitical concerns or whether you're looking at the interest rate hike that is coming, as Neil was mentioning, lots of headwinds still in this overall market. So market conditions have changed, and we have to adjust as active traders to them.